Welcome to my YouTube channel Indian Bull vs Bear. In today's video, I'll share my analysis of historical trends of the alcoholic beverages sector. This video is part of the series The Final Missing Piece. Before moving on, please read the entire disclaimer carefully. The alcohol beverages sector of Indian share market consists of companies involved in alcohol production and distribution, value chain, which includes distillation, brewing, blending and bottling, packaging, branding and marketing, distribution, retail, and ethanol production. India is among the largest consumers of alcohol in the world, with a market dominated by whiskey, beer, vodka, and country liquor. The government policies for the sector include state excise policies, ethanol blending program, and FDI policies. The growth drivers for this sector are the urbanization and rising middle class income, shift towards premium, craft, and flavored drinks, high growth in tier 2 and tier 3 consumption, and ethanol blending opportunities for distilleries. The major challenges for the sector includes highly regulated with varying state laws, high taxation squeezes margins, risk of prohibition policies, advertising restrictions hinder brand growth, and seasonal demand. So now in order to identify the trends in this sector, I will present two graphs. They are the end result of my analysis of the share price movement of last 10 years of top 10 companies of this sector. The top 10 companies of this sector comprises of 3 large cap, 1 mid cap and 6 small cap companies. The first graph will show the yearly returns, whereas the second graph will show the monthly returns. So let's start with the first graph, which is the yearly returns graph. So this is the graph. The green bars in this graph over here shows the positive yearly returns. The red bar shows the negative yearly returns. The orange line at the bottom shows the cumulative returns. The green line shows the number of months with positive returns, and the red line shows number of months with negative returns. So in 2015, this sector managed to give returns of only 11.84% with 7 positive months and 5 negative months. So a below average year for this sector. 2016 was even worse, and it was a flat year with only 0.58% returns with 7 positive months and 5 negative months. But then 2017 was a extremely good year for this sector, and the sector managed to give returns of 111.01% with 9 positive months and 3 negative months. But then 2018 and 2019 were very poor years for this sector, and the sector managed to give negative returns in both of these years. In 2018, it gave negative returns of minus 7.50% with 6 positive months and 6 negative months. Whereas in 2019, the situation worsens and the sector managed to give negative returns of minus 18.33% with 8 negative months and only 4 positive months. In 2020, the sector shows some recovery and managed to give, in fact, very good returns of 47.44% in that year with 8 positive months and 4 negative months. In 2021, this sector skyrocketed and it managed to give returns of 131.62% with 11 positive months and only 1 negative month. So, clearly the best year for the sector. 2022 was an average year for the sector, and the sector managed to give returns of 18.64% with 6 positive months and 6 negative months. 2023 was a very good year for this sector, and the sector managed to give returns of 76.64% with 9 positive months and 3 negative months. And 2024 was another very good year for the sector as it managed to give returns of 58.27% with 8 positive months and only 4 negative months. So to see the cumulative return, let's follow this orange line, and the cumulative returns over the last 10 years is 1930.99%, so which is almost 20x in the last 10 years. Let's see the key takeaways. So the key takeaways: cumulative return 1930.99%, 20x in last 10 years. Okay. CAGR of 35.14%, a very good CAGR for the 10-year period, very good CAGR. Net negative yearly returns. So there were 2 years which gave net negative yearly returns, and those 2 years were 2018 and 2019. So it's a decent number. Best year was 2021. Clearly the best year with 131.62% returns. And 11 months in that year gave negative, positive returns, and only one gave negative return. Worst year was 2019, and in that year the sector managed to give returns of minus 18.33% with 8 negative and only 4 positive months. The positive to negative year ratio is 4 is to 1, so again a decent number. Now let's move on to the monthly graph and see how this sector has performed on a monthly basis. So this is the monthly returns graph. The green bars over here shows the positive mean monthly returns. The red bar shows the negative mean monthly returns. The green lines over here shows the number of years with positive returns, whereas the red line shows number of years with negative returns. So for the month of January, the average returns over the last 10 years for the sectors are 2.12% with 7 positive years and only 3 negative years. So an average month, I would say. But then February and March are clearly the bad months for this sector, as both of them have an average returns in negative over the last 10 years. With February, the average returns are minus 3.50% with 8 negative years and only 2 positive years. And for March, the average returns are minus 1.20% with 5 positive years and 5 negative years. April seems to be the best month for this sectors, which is the case for several other sectors as well. Maybe because of the start of a financial year and probably the government aids and schemes kicked in this month. The average returns over the last 10 years for the sector in the month of April is 7.54% with 8 positive years and only 2 negative years. May, a flat month for this sector with only 0.16% average returns, 6 negative years and 4 positive years. June, a decent month with 4.46% average returns, 6 positive years and 4 negative years. July, another decent month with 4.69% average returns, 8 positive years and 2 negative years. August, a below average month with 2.91% returns and 7 positive years and 3 negative years. But September seems to be a good month for this sector, as the sector uh, gives 5.55% average returns over the last 10 years in the month of September, with 8 years giving positive returns in the last 10 years and 2 negative. October 2 seems to be a very good month for this sector with 5.77% average returns, 6 positive and 4 negative years. November, a below average month with 2.43% average returns, 7 positive and 3 negative years. And finally, December, an above average month with 4.57% average returns with 7 positive years and 3 negative years. So basically, couple of negative months, one flat month, then there is one significant month, and then couple of probably above average and few average months. And I guess these three are below average months. So all in all, a mixed bag. Let's see the key takeaways. First is the cheaper months. So February and March, clearly the 2 months with negative average. February and March are the cheaper months. May too can be included in the same category because of the flat returns in that month. Costlier months are April, July, September, and October. So April with 7.54, July with 4.69, September and October with 5.55 and 5.77% respectively. So few good months for this sector. And finally, the positive to negative month ratio is 1.67 is to 1. So 1.67 positive months against every one negative month in the last 10 years, that is 120 months. So a good number, not the best, not the worst, a good number overall for this sector. So that is all from my side in this video. Thanks for watching it. If you like the content, click the like button, subscribe to the channel, share it with your family and friends, and let me know in the comment section. Thanks for watching. I'll be back soon with another video. Goodbye for now.